Invisible drain on your accounts prevents long-term wealth. Every day, small amounts of cash slip through the cracks. We lose money to auto-renewing subscriptions we forgot to cancel, convenience fees on food delivery, and impulsive small purchases. Because the amounts are tiny, they bypass our financial alarm bells entirely. Financial surveys consistently point to a very specific mathematical leak. The average person bleeds exactly $27.40 a day on meaningless, untracked items. That $27.40 acts as a structural convenience fee. It operates as the precise financial margin keeping millions of people trapped in a perpetual paycheck-to-paycheck cycle. Our brains struggle to calculate long-term aggregation. A $20 charge feels negligible on a Tuesday, so we easily ignore it. To see the true cost, we have to zoom out and look at the annual aggregate. When you multiply that daily $27.40 across a 365-day calendar, it adds up to an even $10,000 every single year. When asked how much cash it would take to radically change their lives, the number one answer people give is $10,000. That specific sum provides enough leverage to clear high-interest credit card debt, escape a toxic job, or build a secure emergency fund. The capital required to buy your financial independence already exists in your current income. You don't need a raise to find it. You simply have to capture it before it leaks out. Capturing that money requires removing human temptation from the process entirely. You must automate your savings, routing the cash out of your checking account the exact moment you get paid. The destination for that automated transfer should be a broad market index fund, like the S&P 500. An index fund eliminates the need to gamble on individual stocks. Instead of guessing which single company will succeed, you purchase a tiny, evenly distributed slice of the 500 most powerful companies in the American economy. You end up owning fractions of tech giants like Apple, anchoring your money to the hardware and software used globally. You also capture a piece of massive logistical engines like Amazon, generating value every time a package moves through a warehouse. By trusting the aggregate weight of the entire economy, you achieve structural diversification. The market as a whole trends upward over decades, making this approach statistically safer and cheaper than paying a professional manager to guess the winners. Once locked in the index fund, it interacts with the most powerful variable in finance, time. Over years, it triggers the math of compound interest, the background of your life. This animated graph shows the mechanics of exponential growth. When you invest, your initial cash earns interest. The next year, you earn interest on your original money, plus you earn new interest on the interest you already gained. Over a 40-year timeline, the curve goes nearly vertical. If you capture that $10,000 annual leak and invest it at the stock market's historical average return of 10%, in 40 years, you are sitting on $4,424,000. Most people never see those numbers because they lack the discipline to wait. Warren Buffett is worth over $100 billion today, but he generated 99% of his wealth after his 60th birthday. The math proves that extreme financial success relies entirely on the ruthless, decades-long consistency of compounding small daily sums. Reaching that multi-million-dollar calculation forces us to ask a psychological question. What is the actual purpose of hoarding this capital in the first place? Society conditions us to want to be rich. Rich means generating a massive income, but burning all of it to maintain a lavish lifestyle of sports cars, mansions, and visible status symbols. True wealth is entirely invisible. It consists of unspent assets, silent index funds, and an absolute minimum of financial stress. A high-burn, rich lifestyle relies on continuous, perfect economic conditions. The moment a market panic hits or a job is lost, the entire facade collapses, leaving zero margin for survival. Prioritizing luxury cars and large mortgages over invisible, compounding assets guarantees a lifetime of anxiety and dependency on a boss. The ultimate dividend of true wealth is independence. That $4 million portfolio purchases something far more valuable than a private jet. It buys absolute control of your own time. A robust, automated investment account acts as an impenetrable shield between you and the world. It provides the breathing room to handle medical emergencies or walk away from bad relationships without financial terror. Stopping the $27.40 daily leak represents the exact purchase price of your future freedom. The highest form of wealth you can achieve is waking up every morning with the absolute power to dictate exactly what you do that day, with whoever you choose. Stop paying the invisible convenience fee to the system. Redirect that capital into your own automated engine, and buy back your life.